Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Conference, and I'm here with Shundrawn Thomas, who's head of funds and managed accounts at FlexShares. Shundrawn, great seeing you.
Good seeing you, Tom. How's it going?
Really good, really good. But most importantly, we want to hear from you.
Sure.
There are a lot of advisors that are, somewhat concerned about volatility in the markets today.
Right.
We're concerned about rising interest rates. We're concerned we haven't seen a bear market in 6 years.
Right.
But we're more concerned about what's going on overseas. What do we do?
Yeah, well, the first thing is it's interesting to note, obviously, the volatility in the marketplace, because on a relative basis, it's actually not that extraordinary. But we've had such an extended period of time where you haven't seen volatility, it sort of throws the system into a little bit of shock. But you raised the question about, sort of the exposure, particularly given what's going on in international markets. And obviously, we've seen lots of concern, not just with respect to currency exposure, but more importantly to the growth in those underlying markets. Because we always take a long-term view, we say you really should not lose the opportunity to take advantage when you have dislocations in the market. Mm-hmm. So while we're not saying people should jump in, say for instance, and try to catch a falling knife, so to speak, we are saying it's a great opportunity to revisit what's the allocation in your portfolio. And it's actually a great time, contrary to popular belief, to think about what's the level of exposure that you have across global markets, particularly in some of these international markets.
Well, when you look at that and you say, global market capitalization is 60% outside the US, right? And if we're spreading the wealth across the world, does it make sense to have that much overseas? And if you do, and we're coming up on the end of the year, and even if you're following an asset allocation strategy, you'd be rebalancing into more of these areas that have declined, right?
Right. Well, the thing I think you have to think about is over time, right, discipline is always going to be your friend. And so what we're finding, it's not so much that you have to look to a situation where you're quote unquote taking on more risk. It's, are you even taking the exposures that you said you wanted to? So for instance, what we're finding in certain categories, whether it be international exposure or exposure to real assets, when you look at people's benchmarks or what they say their proposed asset allocation is, they're underweight those. Now, from my standpoint, if you really have changed your strategic view, there's an argument to change the allocation. But if you're really underweight because you're nervous, that doesn't tend to pay off over time, because what you're really doing in a closet sort of sense is you're trying to time the markets, and we don't think that's the best strategy for any long-term investor.
Yeah, do you think that that's the case? Do you think that there are a lot of not only investors but also advisors that are getting too much heat from their clients when they're in these emerging market countries or even in the Europe area where there were big declines, that have said, you know what, I'm just going to back off because it's not worth taking the heat?
Well, it's been a tale of two tapes. There are some advisors, and I have to tell you, we've been pretty impressed at how well in this volatility they stayed the course.
Good.
Not only stayed the course in terms of what they're doing or not doing, I should say, but how they're engaging with their clients. But I will tell you, there's another extreme, particularly for those who have very dynamic strategies, so to speak, because there's almost this demand, because of the nature of what your value proposition is, to argue that you're doing something in the midst of that. And those are some of the ones that you get concerned about. Now, when there's a disciplined way you're going about that, that's one thing. But again, if you're just reacting to anxiety or noise of clients, I think it could hurt not only the performance of the portfolio, but more importantly, the long-term relationship with the client.
That's a great point. So you know what I love about FlexShares Northern Trust? You guys have some great dynamic products, but you always lead with helping the advisor out, educating. And I know you're talking to thousands of advisors every year, and you've got a lot of great research. So, on behalf of the industry, I thank you for that and wish you continued success.
Thank you, Tom.
Thanks.